Hi ladies and gents, welcome back. This is video number 43, but number 5 of module 3. And in this particular video we're going to be talking about the ADX indicator along with the awesome oscillator. Alright, this is how it looks like once it's all set up. Alright, and if you go here to your templates section, you'll see that I've created a template called TFB-40 video 43 strategy 3 AC ADX indicator. Alright, go ahead and just choose that. Alright, and you should be ready to go. But if you don't already have that template installed, just simply go ahead and right click on the alligator indicator to delete it, and then just simply left click, drag and drop, and then change your positive directional index to a forest green. I've done that on purpose. Alright, for those of us here that may be colorblind, so hopefully this will come out a lot better. Alright, I've set my ADX line black, okay, and I've given it a reasonably nice thickness. The period is set to 14 and apply it to close. Everything else is just fine. You could also put in a level in here if you wanted to, but I've just simply replaced it with a horizontal line. Okay, and I've placed that on the 30 area. What you could also do is go ahead and click add and type in 30, and you can change your color maybe to a dotted red line, and you can now see that the 30 line is now being plotted onto the chart. Okay, but either way is fine. I mean, when you go ahead and place the trend line tool onto your chart and you can't get it bang on perfect to 30, then all you have to do is just right click on the line after you've double clicked on it, so you've got these two editing points, one on the left and one on the right, little squares there. Right click on it, choose horizontal line properties, and then from there on the parameters section just simply go ahead and type in 30.00 and then click on OK, and then double click on that line to lock it into place. Either way is fine. It's up to you. You might find using the second version a lot easier for you, but either, as I say, either's fine. Either's fine. Okay, alright, so we're on the 4-hour time frame once again, and now I'm hoping that you can see where I'm coming from when I'm adding more than one indicator or an extra indicator to the chart from an existing one that we've been working from, which is the awesome oscillator. Alright, and hopefully you will start to see how this indicator starts to make sense and why it plays a role in your trading. Alright, so let's go ahead and still use the same principles that we've been discussing in the previous videos, but now we're going to apply the ADX. It's called the average directional movement index. Okay, and what this particular indicator does in layman's terms is that it lets you know when the trend is about to change direction, and it also lets you know how strong that trend is as well. Okay, alright, so what we're looking for is really a trigger point, okay, or an alert, should we say, and the alert is really the ADX line that I'm looking for. Okay, and once I've seen the ADX line jump above the 30 line, then my next area where I place my eyes is basically I'm looking for this green line or the red line. I'm looking to see which one's on top. In this particular instance, we can see that the red one, the green one is actually on top. Alright, so this is to let us know that we are in an upwards trend. Alright, but I would like a confirmation, okay, and it's always nice to get an extra confirmation, and I can place my crosshair tool, and I've just used this one up the top here, crosshair, okay, and I'm going to place it just where the black line pierces above and touches the green line, and I want to see where it actually goes. Alright, and we're on the green bar here, so that's good. Alright, also my next object to look at is to see if the signal is developed on a resistance level or on a support level. Alright, so I'm going to draw in some lines and I'm going to see if this is okay. Alright, okay, so we see that there's some support here and there is some support right there, support right there, support right there, and support right there. Alright, so we're all looking good in regards to that support line, so that's okay. Alright, so let's go back to that line and then let's take a look to see if that rang true. So here is our trigger. Then we take a look to see if it lines up with a green bar, and it does. Alright, and then we want to see if we're on a support or resistance level, and we are indeed on a support level where the signal develops, which is right there, and then we can target the next previous high, which is up here. Alright, so we can get in at 120 at 132.26 and get out at 133.37, which is approximately 100 pips. That appears on the 4-hour time frame. So we're looking at 1, 2, 3, 4, 5, 6, 7, 8. Alright, 8 times 4, 8, 16, 24, 32. So that's 32 hours. Alright, and that's really about normal. 32 hours to have a trade open when you're working on a 4-hour time frame. Alright, so if you see that the trade goes up and then it starts to come back down again and you're getting nervous, that's perfectly fine. I mean, I'll completely understand if you closed it out. But if you're using a demo account, please have a little bit more patience with it and allow the market to do what it does. I know it's sometimes hard to fathom, to really get it in there and fine-tune your mind to say, okay, I'm going to leave this trade open a little bit more, especially when there's money on the line. Alright, well, this is demo money, so it's not going to really matter. Okay, and you might have a question like, is demo trading really the same as live trading? Well, yes and no. Yes, in the terms that the market will do exactly the same as what the live account will do, but no, in the terms of emotional control. If you can treat a demo account like a live account and try your best not to lose money, then you might have a little bit more success before approaching a live account. Only next suggestion would be to open maybe a micro account with $10 or $100 or something like that, and then see how you control your emotions and whatnot. But I will tell you though, if you do your analysis correctly and you target the correct previous highs and what have you, we could also use, remember how I mentioned before in some of the other videos where I've allowed for a margin of error. Alright, just in case I put my my highs too high, so I might go ahead and just compensate for like a 20% difference of whatever that distance is from here to there. So if that's 100 pips, alright, I'm going to need to divide that into 20%, which gives me 20 pips, obviously, right? So my target is going to be, rather than 100 and whatever pips, it's going to be 80 pips. Alright, and just let it ride. Have faith in it. The only time that I would agree if the trade went against you and you closed it out is if you're working off the like the 1 minute or the 5 minute or the 15-minute time frames. The market can go up and against you within a very short space of time, and that can get people a little bit nervous and whatnot. So you have to be very nimble, very alert on smaller time frames. If you want to be an investment kind of person, who wants to do proper investments, you're not like going to put money in your 401k and then take it out a week later, are you? Or an hour later, alright? Because they won't let you without a punishment, alright, without a penalty. Okay, so this is kind of like, treat this as along the same principle. Allow a little bit of long term, a little bit of patience for your trade to mature. Okay, and you will come off pretty well. Alright, so let's just take that off. Let's show you a sell trade example. Alright, okay, let's remove that trend line. Okay. Alright, so here we have where the ADX line, first of all, goes above the 30 line, and then the next thing I'm looking at, what color is this line? It's red, so it's to indicate a downtrend. Alright, and then I'm looking to see where the black line crosses. Alright, the black line actually crosses, well, it's a bit iffy, but this one actually crosses on the green. This could be, up for argument, but if it's like 50-50 and you're not really sure whether it's on the red or on the green, ignore the trade, because it's always better to, wait for another signal to come in. Alright, so let's try another one. Okay, alright, here's one. We can see where the black line has gone above and we are in a red, and this red line goes over the ADX. It's a nice confirmation, and here is basically where we would get in. So let's go and take a look at that area where we would need to get in. I might need to rearrange this again, so let's go and take a look at that. Okay, that was pretty good. Alright, so we take a look at that, and then we need to say to ourselves, are we on a support or a resistance line? Alright, so we do have some confirmations here. There's a resistance there because the prices were underneath, and there's a little bit more, and there's a little bit more here. Okay, so that's pretty cool, and there's some support right there. Alright, okay, so yeah, that would be good. Alright, because the signal actually appears right there, so that will be good for a sell trade, and we will target the next previous low. This will be one of them, this will be your next, and this will be your next, and this will be your next. So you calculate the difference between here, the entry point, down to here, alright, divided by 20% for the margin of error. Okay, and if that pip target from here to there was say 60 pips, what you would need to do is trail step it so you can take advantage of these. Alright, so when the trade comes down, it moves to this is your TP, you move your TP down to the next one, then you bring your stop loss from here down to break even, and then when that gets to that first area of TP, if you had two lots, you take off one, so you're left with one, so you've just gained 60 pips times one lot. Okay, and then when this one comes down to here, you've moved it to break even, and you close off another half a lot, so you get 60 again times 0.5. So now you have another 0.5 going, and this time you're going to move your TP down to this one, so this is the third succession, and then you've moved your stop loss from break even, and now you're booking into that profit, so that half a lot that you've got left over is going to get that 60 pips anyway, but this time it will come down to there, so that works out to 120 pips times 0.5. Alright, so you get 600 from that one, you get 300 from that one, and you get 600 from that one, which works out as 1,500 bucks. Not bad, eh? Not bad at all. And that happens all within 1, 2, 3, 4, 5, 6, 7, 8, 9. In, say 10, so 40 hours. Alright, 40 hours to earn $1,500. Not bad. And most of that time was probably while you was asleep. Alright, so that's how you do it, ladies and gents. Okay, so play around with that strategy, and as I say, go ahead and insert it into your templates folder and choose video number 14, strategy 3. Alright, okay, so I hope that's helped, and I'll see you very soon in the next video. Bye for now.